Welcome to the WangHiro podcast, where we answer Malaysians' burning questions about personal finance with fact-based answers. Getting sick is not only uncomfortable, it's also very expensive. Last year, medical inflation in Malaysia stood at 12%, 3 times more than the general inflation of 4%. Most Malaysians hedge this cost by buying medical insurance. But what happens when you've bought your own medical insurance only to find out your parents have none? Welcome back to WangHiro with me, Louis, and my co-host John. On today's podcast, we ask, what do you do when your parents need medical care but don't have any insurance to cover the cost for it? So, John, were your parents the type to buy insurance when they were in their 20s or 30s?
My dad nearly became an insurance agent.
Oh, okay.
Yeah, I think I've been very blessed and lucky. My parents, especially my dad, was very well aware of the need for insurance. They didn't really buy a very expensive one. They were both teachers, but I think the benefit of where my dad stood for was he actually came up with an entire scheme for a lot of teachers, all the teachers in Malaysia. So that's why they managed to get something like a collective scheme. Obviously, that warrants a whole new episode. How my dad fought for it, for for QPACs and all that. But long to short, I think they were a believer. But at the same time, the policies back then, you're talking about 20, 30 years ago, will not be sufficient in today's day and age. But thank God they had policy for both my mom and my dad. Even myself, me and my sister, we didn't have a medical card, but we had some sort of an endowment plan, which I don't think was very wise, but they didn't know any better. So back then, yeah, but they did have insurance, and they most recently used it. Most recently, my mom had a critical illness. I'd rather not reveal about, but
I understand.
yeah, she actually had to fork out, I think, about 30 to 40,000, but it was paid by the insurance.
Oh, luckily.
Yeah. Okay. My dad recently had surgery as well, a knee replacement, and that also actually cost about 30 over K, and it was paid by insurance as well. So there are times when my dad was actually admitted straight to the government hospital, but that was because Sarawak, we're very lucky. We actually have a heart center. We have an IJN in Kuching.
Oh, I didn't know that. Government.
Yeah, so usually we have an IJN, Institute Jantung Negara, smack in KL. That's where Mahathir was treated.
Right.
But we have an IJN branch actually in Kuching itself, separate from the separate from the main general hospital. It's actually in Kota Samarahan. So my dad had a stand built there as well, done there as well. So government, he did not exercise his insurance back then. What about you, Louis? What were your parents like? Did they had policies that they bought earlier on, or did they go through a roller coaster before they really
Yeah. For me, I was also very lucky because while my dad wasn't a big believer of insurance, my mom was. So, they started their insurance journey very early as well. It's just that whatever they bought back then may not be as useful lah. Yeah, in the end, they terminated a lot of them, wasting like maybe up to 50 to 100K. I don't know, of that time's value. Yeah. So but at least the good thing is that after that, my mom continued to buy insurance and bought insurance not only for themselves, but also for the kids. And my dad also managed to exercise this his right to claim during his illness a few years back.
Okay.
I think it costs like 65,000.
Wow.
So just short of his 68,000 a year.
Limit.
Yeah, limit. He has very low limit because like my mom bought the insurance later after a lot of the other insurance didn't work or something. I don't know, but I think not very good insurance. So we bought again in his mid 50s. So at least the 65,000 they were able to claim that. So I think for both of us, we belong to the lucky lah.
Yeah.
The lucky who's now we're at that age where we at the age where you have a lot of financial burdens on expenses on a monthly basis, and but we know that not everyone is as lucky and in the same position as us. For some people, their parents maybe were not big believers of insurance. They didn't buy insurance, and then now they hit their 60s, 70s, and they have a lot of sudden medical expenses that have cropped up.
Mm-hmm.
So I think sometimes parents of that nature, they think that maybe their savings would be enough, or if I keep enough money, then I can just use my savings to pay. But sometimes even then, it's not enough. They have to after they know by calculating, oh, if I keep paying, then all my savings will run out. Then they reach out to their kids, right?
Correct.
Someone in their 20s, late 20s, 30s. Hey, can you help me to pay for some of my medical expenses? So here comes the dilemma, right? If you only have enough money to support yourself, paying all of these medical fees could make you financially unstable, actually.
Yeah.
So on one hand, you have your present and your future. And then on the other hand, you have your parents' medical expenses. So John, I mean, in this situation, how should we balance this?
Yeah.
What are the options that we have?
Uh, I think it's very common in countries even like Hong Kong, and I think Malaysia, we still somewhat practice somewhat of socialist kind of policies in our government policies. In Hong Kong, they call it the sandwich generation. You have to support the elder generation, and then you have to support your kids. I think in Malaysia, we are somewhat alleviated by a lot of subsidies by the government, especially healthcare. So options, there are a few, some unconventional ones, some conventional ones. I think the first one I want to share is that there are some concerns where your elderly parents may not be able to get insurance, or it's going to be very expensive. I plead with the audience that actually go exhaust all these options first. And it doesn't necessarily mean you need to buy, but you can explore. So I will not be able to cover all of the different solutions, but there is one kind of medical plan called a term plan. And in the days of the past, the term medical cards are similar to what your dad experienced, very low annual limit, very low lifetime limit, and all that. But the term medical plans have somewhat evolved. And today they do have, I've seen plans myself. I nearly got this for my dad. It's actually a term medical card. There's no lifetime limit to it. And there is there's quite a high annual limit, which is about $1 million a year, and it goes up to about, I think, 2 million, if I'm not mistaken. I've not done insurance for the past 3 years, so bear with me if the product has evolved to be something better or worse, right? But there are options of what I call term medical cards. So the only concern right now, it wouldn't be so much of money, because these term medical cards, they cost roughly about anywhere between 3,000, 4,000 to about 6,000 a year is for someone in their 60s, depending on condition or that kind of thing. Okay, so if it's about 6,000 a year, that's about 500 ringgit a month lah. Just if you're on the high side. So if money is something, if 500 ringgit is something you can afford, I think it's still doable. Where I worry is really the health condition of your parents at your 60s. If they're already having tons and tons of medical condition, even with money, right, you wouldn't be able to buy. So that's one option that will be pushed aside the moment you have unhealthy parents. Okay. So what's the second option? Government hospitals. Yes, I know people will complain it's a very long queue line, whatever, but beggars can't be choosers. Right? Okay.
Yeah.
Yeah. And even within government hospitals, there are what we call semi-private hospitals. So I don't think you have that in Sarawak, but in West Malaysia, there are hospitals like UMMC, University Malaya Medical Center. It's a semi-private hospital, research hospital, because of its UM's medical faculty. You pay, but it's still within very reasonable cost because it's quite heavily subsidized. Okay, but at the same time, shorter queue, because you actually have somewhat of a disincentive for freeloaders lah. You get what I mean? Right? Because
How much are they paying actually?
So it varies from different cases, but usually, let's say for a scan or whatever, that if you go to a private hospital, maybe it will cost you like 1,800, 2,000 ringgit. Maybe in UMMC, maybe half the price, or 80%. But I think it's still a huge discount lah for me lah.
Yeah.
Okay. So the option one is like try to get, if your parents are still healthy, try to get them a term medical plan. Option two is, if you can't wait in the government hospital, then a semi-private. Now, option three is going to be painful, but I would feel important. Set financial boundaries. So you see, here comes the struggle, Louis. I mean, like in your case and my case, we're very lucky that our parents had medical plans or insurance they bought. But for those who are not so lucky in the sense, and the predicament is different, where they have been guilt tripped by their parents to say, hey, it's time for you to pay up because I've already brought you up, I already spent this kind of money, supporting your tertiary education and all that. I would say have that honest and frank conversation with them. Yes, I don't mind contributing back, but there is a limit. So there's many ways of doing it, and I leave that to the creativity of the audience. One is you just say lah, this is how much I can give every month, 200 ringgit. Go figure it out. Just have to be very straight up front. So at the same time, it doesn't say that you want to absolve your responsibility of not paying, but at the same time, there is a limit to how much you can pay. So in a way, it's like coming to the middle ground where you set a limit to tell your parents, this is how much you can give. Okay. And I think with that, at least it helps you plan your other financial commitments as well, your children's education fund, your own medical expenses, your own medical insurance, and all that kind of thing. So with that limit, right, it gives somewhat of a consolation to the parents. Hey, at least my son or my daughter is giving me something. But at the same time, they also know that, hey, there's a cap. Okay. What do you think?
Well, yeah, I think when I mean we got the inspiration for this topic from a Reddit thread. I'll also leave that in the show notes. When I read about this case, I felt a little bit like sad in a way, and then I felt a little bit like like you're in a place where it's very hard, on both sides, right? So on one hand, if you do that, right, I can only imagine, your relationship with your parents not being very good, right? So but we have to also be realistic that the expenses are going up. These are things that, decisions made that, you didn't have much control over. You were probably just a kid that they decided not to do it. I also have friends whose parents decided not to buy insurance. I was shocked because one day this friend reached out to me and said, that was only like 5 or 6 years ago, or less than that. 5 or 6 years ago, our parents were like maybe late 50s lah. Then she told me, Louis, do you have any insurance agent to recommend? Because she was in Singapore and I'm in Malaysia. Parents are also in Malaysia. So she said, oh, can you recommend my parents some insurance agents? I'm like, oh, what for? I thought they want to top up or change agent. Then she's like, because they don't have any insurance. And my dad got a medical condition. I was shocked, because I knew this girl from when we were in primary school and appeared to be very well off. So I always thought that they had all their financial things like arranged lah. So I just asked her, how come your parents didn't get it? Like? Then she's like, oh, because they were not a big believer of insurance back then.
And I think you can't blame them because, I mean, insurance in the past, the industry of the past had a lot of shady things, a lot of scams. And I think it all has to change through educating. So the fiduciary, this word is not, it's easy to mention, but it comes with a very big or heavy responsibility. The fiduciary duty of the planner, of the agent to educate the client is why they are compensated high commissions. So the problem is they take high commissions, but they don't spend that time to educate the client or to service the client properly. And that's where there's this bad perception, bad bias about the insurance industry and causes things like this. So I'm not putting the blame solely or squarely on the agents or the industry. What I'm saying is that all hands have to clap together because if not, this bias will forever. But I'm heartened to see most younger generation today understand all this. And I think one of the reasons why we do this episode is that we cannot solve. Both Louis and I may not be able to give you a step 1, step 2, step 3, 100% because everybody's nuance and circumstances is different. However, we can lay whatever options or the cards on the table, and then from there you can explore. You can come to realization. There may be alternative or creative ways of solving this problem as well.
Yeah, I mean, also to the point about the term insurance, John. I mean, how is it different from a normal medical insurance?
Okay. So I'm going to give you the concise version. The normal investment link, the more, I wouldn't say normal, I would say the more common insurance being sold today, especially a medical card, is what we call a 2-in-1. So usually it couples a whole life plan, and no, it covers. Sorry, I shouldn't say whole life plan. It covers death coverage, it covers critical illness plus medical coverage. So in a
Mm.
way, it's kind of like a Lego set where you cover different coverages plus the medical coverage. And then there is an investment component to it. And the reason why there's an investment component to it is because they want to maintain the premiums even in the future years of you paying that plan with inflation rising. So that means you pay 200 today. Technically, as you age, the probability of you falling sick or getting a medical case is higher. That means the cost to cover you will go higher. But most people want to pay a fixed kind of premium. So in order for the insurance companies to actually cover the increase in prices or inflation, they will have an investment pot to actually pay for this increase in the hope to offset whatever difference that you're paying, today. You see.
Oh,
So that's what they do. They have a pot, they will invest it on their behalf. Hopefully it can grow in tandem with the inflation cost so that the buyer or the user can continue paying the same premiums. Okay. Now, in term plans, you don't have that kind of protection mechanism anymore. So when you buy today at the age, let's say you buy at the age of 60, right? Your premiums may be 450, 500 ringgit, right? Every 2 years, as you age, the premiums increase because the cost to cover you increases because of your mortality, because also of your your age, your mortality, and also your medical inflation costs. So you are not shielded from the inflation costs. You continue to pay higher and higher lah, as you age lah. But your cost to pay obviously will be much cheaper because you don't have that investment pot anymore. That's the long to short of it lah.
so is it like, if it's term plan, then do we like so the rates will be changed every year? Is it?
Every year or every 2 years. So they will give you a schedule. So
Okay.
I would like to use an analogy of car insurance.
Oh,
Car
okay.
insurance you buy every year, you burn. You can't recover any money back. Okay.
Right.
But if you have been accident free for 7 years, then you get this thing called a no claims discount lah. Okay.
Right. Yeah.
Right. In the term medical plan, it's the same thing. Every year you burn because whatever you're paying goes straight into the medical coverage or whatever coverage that you're getting. Okay. In an investment link plan, the one that is more common today, when you pay today a certain premium, a certain portion goes to the investment pot, a certain portion goes to coverage, a certain portion goes to your medical plan. Okay. When you surrender the plan, let's say after paying for 10 years or 15 years, there is some residual cash value because of the investment pot one. You get back some money. But in the term plan, zero. Even you pay 15, 16 years because no allocation has been set aside for that investment pot. Am I making sense to you?
Yeah.
That
Yeah.
investment pot is not to make money, That investment pot is actually to offset the medical inflation that you continue so that you can continue paying the same premium. So in the case of elderly people, you take a gamble. Let's just say your parents are 60, and let's just say their life expectancy is until 80, so 20 years, right? You pay increasing every year until, let's say, 20 years old, versus that of you buy an investment link plan where investment link plan, I can assure you, it's guaranteed more than 1,000 ringgit already a month for someone 60.
Okay.
Yeah, so let's just say if like a term plan, it should be about 400 to 600 ringgit. Equivalent, same coverage investment link plan would probably cost about 1,000 to 1,500 a month. Yeah, so
But
double to triple the
the
cost.
coverage would be the same or different?
The coverage on the investment link one would be slightly better. Slightly better.
Okay.
Yeah.
I mean, if you're only left with these options, I guess it's still something to consider. At least the monthly expenses will not be as high, lah, right?
Correct. You either
About
paying
half.
triple or paying 500 lah. Which one you choose?
Yeah, lor. Yeah.
Yeah.
But what kind of like illnesses do
Almost
let's say
everything. So they will cover you for your 36, now 41, or even 42 critical illnesses, all the medical expenses. But they will not give you a payment of a cash lump sum. So investment link plan, right? Because there's like a 2-in-1 coverage. Most people worry about the hospital bills only. But when you're sick, the other component that you need to worry about is actually your living expenses. And in an investment link plan, the beauty of that is there is a cash lump sum paid. If your plan is done properly by your planner, what you'll get is medical bills paid by the medical coverage,
Mm.
and then there is an income replacement where 200,000, 300,000, or even a million can be actually paid in kind, cash in kind. That can be used for your living expenses, can be used to even for dietary requirements, because it's your money already. You get
Mm,
it?
mm, mm.
Yeah. So that's why
How
it's so
about
expensive.
how about like those like preconditions that will disqualify you for even term insurance?
The same, what
The
will
same.
disqualify you for investment link as
Okay,
well.
okay. So it's the
So
same. It's the
it's
same
the
lah.
same
Okay.
underwriting. There's,
Oh, okay, okay. The
however, there
only
is
difference
one
is it
plan.
doesn't have. Okay.
Yeah, there is one plan or one or two plans, depending on the company. They open it up. They don't care about your health condition, whether you got diabetic or whatever. You can actually buy this plan, but it only covers you in death. So
Okay.
that
This
means you already know you got cancer, for example.
okay.
Actually, it's the insurer that I was representing that had this product. Is mainly for cancer
Oh.
survivors. So the moment you get cancer, let's say you exhausted your medical plans, you exhausted your critical illness cover already, but you want to buy something for your beneficiaries, okay, in
Mm-hmm.
death. Because in normal policies, you can't even buy. Let's say you want to buy a normal death plan, but you already have cancer. Most insurance, the
Yeah, lor.
normal plans, they will not want to cover you anymore because they already know, you already got
Yeah,
cancer,
lor.
right? So what they do is they will say, okay, this plan, even though you've got cancer, you've got whatever, you can buy, but there's also a certain cap. You cannot
Mm,
buy 20 million worth of this. You can only buy, I think, maximum 500,000 or something. Yeah.
Okay, lah. Especially if like there's like like dependence, right? In case,
Correct.
yeah. Okay, so I think we've covered all the potential options of like this scenario where if you have parents who don't have insurance, and what to do, right? So the options are not the best, but I think like John said, you want to explore them one by one and see what kind of like arrangement you can come up with that will support yourself and also support your parents in the best way possible. I think at this point we can't look for a perfect solution. It's about finding the optimum point.
Correct. I
Yeah.
think that's the right word, finding the optimum
Right.
solution.
Yeah, where you don't financially bankrupt yourself, because if you have children, then you're gonna pass that problem on to them instead, right? So that can exacerbate the situation generation by generation.
Yep.
Okay, so that wraps things up for today's episode of WangHiro. Hopefully you picked up some tips on how to handle this scenario. So to our audience out there, if you're in this situation, how are you handling your finances? Leave your answers in the comment sections below. Thanks for tuning in today's episodes. Make sure to like, subscribe, and hit the notifications button to get updates from WangHiro. We'll see you again in our next episode. Bye bye.